since early August, with benchmark indices Nifty and Sensex falling over 2%. The fear gauge, India VIX, spiked to nearly 10% as investors curbed their risk appetite amid the escalating Middle East conflict. The correction was witnessed across the board as mid and small caps plummeted in line with the headliners. Among sectors, all ended the gain deep in the red. Realty was the worst performer, falling over 4%, while banks, auto and oil and gas stocks fell 2 to 3%. To help us understand the factors behind the market meltdown, we're joined by my colleague Suyash Maheshwari, who joins us from the newsroom. Suyash, what are some of the factors behind this market fall? If you could summarize that for the benefit of all the viewers.
Certainly, Kabir. Well, to call today's sharp correction a Black Thursday sort of an event won't be an understatement. Indian markets gave away over 2%, and I'm talking about headliners Nifty and Sensex over here. And as you rightly pointed out, this was the worst fall since August 5, and the August 5 fall happened on the back of Japan raising interest rates, which essentially led to the unwinding of the Japanese yen trade. And this also is the second worst single-day fall after June 4th, the day of Lok Sabha election results. And in the single session, Kabir, investors have lost close to 11 lakh crore rupees, and we have witnessed selling across the board. Now, there are multiple factors at play over here. First, of course, as you mentioned, is the rising tensions in the Middle East, and there are concerns about escalating hostilities between Iran and Israel. And as we know, that region of the world is a major importer of oil, and that really throws a curveball for a country like India, because as we are major importers of oil and we are net importers of oil, any spike in crude oil prices really disturbs our balance of payment. And not only our balance of payments, oil is also a key raw material in multiple industries: paints, tires, rubbers, chemicals. Also, it has impact on logistics business, so auto sector also gets impacted. So a wide-based impact of the rise in oil prices. Another factor that is leading to the correction in stock markets is the new rules that were announced regarding futures and options trading. So SEBI, as we know, in the last 12-15 months has voiced concerns about rising retail participation or rising speculation in the futures and options segment, and they have come out with a set of 6 rules. Essentially, they are going to raise the contract value, make it harder for retail investors to participate or dabble in the futures and options segment, and that has really dampened investor sentiment as well as contributed to reduced.
So Suyash, in terms of support and resistance levels, what are these resistance levels that one needs to track at the moment?
Certainly, Kabir. So the market, as you as we have been talking about, has taken quite a substantial cut in the last 3 or 4 days. Now, if I'm looking at the support levels on Nifty, and I'm tracking the Fibonacci retracement levels from the entire rally that we have seen from August 5 to the record highs that were touched last week. So first level of support comes at 50% retracement level. That sits at about 25,085 level. If that is broken, I think a major support for the index could come in somewhere around the 24,800 mark, and that is a 61.8% retracement levels. If the market does see a pullback from here on, first level of resistance for the traders to track over here will be 25,366 levels, which is nothing but the 38.2% retracement level of this entire rally we have seen from August 5 to record high levels. And the second level of resistance could come by the way of 25,714, which is nothing but the 23.6% retracement level.